There's a whole scare tactics game going on, but here we are at 40,000. Imagine if they make it illegal to possess physical Bitcoin or to withdraw Bitcoins from an exchange. Maybe more so than most people realize, but if once that aspect of Bitcoin is lost, then Bitcoin is lost. There's a lot of real estate being sold for Bitcoin at the moment. Imagine if they make it illegal to possess physical Bitcoin or to withdraw Bitcoins from an exchange and make it paper Bitcoin. That would open the doors to great manipulation. That should be avoided at all time, because then it would be like gold. Gold has this intrinsic property that it is not easily collectible because it's heavy. The transport is very expensive, and even it's not only the transport, it's also the vaults are expensive, and it has to be insured. So it's about, I guess, 1% per year. It's the cost of gold having in a vault, even without the transportation. So gold has this very intrinsic thing where you'd rather have the paper gold than the physical gold. But Bitcoin doesn't have that disadvantage that gold has. Delivery is easy, delivery is fast, delivery is cheap, and holding it is so superior to holding gold. But once it's illegal or made impossible to withdraw gold, then that opens the door to manipulation, because then it's basically a fiat world. And it's very comparable to 1971, where Nixon basically said, well, from now on, you cannot withdraw the gold anymore. So France, you brought all the gold after the World War. Thank you, but you can't have it back. You'll have to take our fiat dollars, which they weren't happy with. But that's it. So if the exchangers are going to do that, well, of course, that would lead to people that have physical Bitcoin not putting it on exchanges anymore. So everybody that has Bitcoin on exchanges loses the right to withdraw in physical Bitcoin and is in a paper world. And that's why it's a very, very good thing to always, not your coins, not your Bitcoin. Yeah, and there's a very fundamental truth in that, maybe more so than most people realize. But if once that aspect of Bitcoin is lost, then Bitcoin is lost, in my view. So I personally use exchanges only for selling and buying, but not for custody, for keeping the Bitcoin. But I think that's very, very dangerous. But right now that makes Bitcoin manipulation very hard versus gold manipulation, which is very easy for states. Yeah, I don't think we see manipulation of the Bitcoin price at a level that is sometimes suggested on Twitter. Certainly not like gold, because it's less possible than gold as well. But I do see spoofing a lot, of course. And there are some accounts that track the orders or all the bids and asks through time. Very interesting graphs and charts being made, and so you can analyze the dynamics, the bids and asks. But there is definitely spoofing going on. And everybody that trades knows this. The big, indeed, sell walls that disappear once the price goes up. Same with the buy walls sometimes. So there's because the market is sort of unregulated, and spoofing, of course, is illegal. But in Bitcoin, you can do it. And so there's a whole scare tactics game going on, and especially retail is very. So that happens, yes, but not in a way that it can suppress price forever, sort of thing. And also, just to give that some data, some underlying, if we look at the big price swings of Bitcoin, those were not caused by manipulation. You can easily attribute those to other things like macroeconomic news, or the big drop in last year was caused by the Chinese mining ban, very explicitly, and the big drop in the year before that in 2020 was in March. That was the COVID scare that was visible in all markets. The current drop, maybe from last 2 or 3 months, is caused by the inflation and the possibility of the rate hikes by the Fed, and the 10-year interest rates really going up from 1.5 to 1.88%. And even before that, I think you can attribute all the major drops to some macro or Bitcoin specific event, and not so much to manipulation. So it's Occam's law, basically, Occam's razor. The simple explanation is that's a macro or Bitcoin specific event, and not manipulation. And I know that especially since the end of 2017, when the futures market started for Bitcoin, since then there was talk about manipulation of the Bitcoin price, and that Bitcoin would never see 20,000 again, because now now there is futures, blah, 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 blah. But here we are at 40,000. From my point of view as an ex-institutional investor, I should say, because I quit my job in March, as you probably know. But I see derivatives markets, and futures is always the first, as a good thing, as a natural growing up of the market, as a maturing markets should have derivatives markets, because derivatives markets slice and dice the risk and return profile of the underlying asset and make it more accessible to participants that would otherwise not invest in Bitcoin. For example, a lot of traditional finance institutions, say the ETFs that we now have, the futures ETFs, a lot of the funds are not equipped in their back offices to handle Bitcoin, to handle all the keys and the wallets and the processes that go with it, that not one asset manager can walk away with all the Bitcoins. That's what we have seen in some exchanges, of course, over the past couple of years. So they're very scared about handling the Bitcoins themselves, and they're very happy to pay a premium to not have to do that. The same thing with gold. So some gold investors rather have the paper than having to buy vaults and guard the vaults and insure all the gold in there. So there is a very large group actually of traditional finance people that rather have paper Bitcoin, and futures makes it possible to have exposure to the asset without having the asset. It costs you, of course, it costs you the difference between the spot price and the futures price, which at times can be very large, like 20 or 30%. Right now it's under 10, so that's more, it's normalized, if you will. So there's a lot of real estate being sold for Bitcoin at the moment. And a lot of Bitcoiners that really hate the idea of having a lot of Bitcoin in their bank balance, because they know the accounts can be frozen. They know they cannot, well, especially the big investors, suppose you would transfer like 50 million from your bank account to a bank account in New York or London to buy a nice piece of real estate. At least from a European perspective, that would lead to probably your bank being frozen, your account, a lot of questions from the bank. Probably you have to prove where the funds came from. The burden is on you, and you probably, make a lot of lawyers' costs before you even, and a lot of time is wasted before you can do the transaction. Probably the real estate is gone. So a lot of the nice real estate is, and I know that's also true in Dubai, for example, in the Middle East, is settled in Bitcoin because the transactions go through. Yeah, it's a lot easier. The deal can be done with Bitcoin and not with the dollar or the euro anymore, because that's totally weaponized, of course. So I guess that's, you see a lot of people asking for Bitcoins in return and not fiat, because fiat, why are you in Bitcoin in the first place? Because all the problems with fiat. So I'm personally at the point that I'd rather have Bitcoin for services or deals than fiat, because, and you hear that with a lot of Bitcoiners. For example, the ones, I don't have a newsletter, but suppose you have a newsletter, all the hassling, all the stuff and harassment of banks with your cash flows. It's horrible. It's a horrible experience. For example, the European case, or close to Europe, would be Turkey right now, experiencing 40-50% inflation in several months. And the more American example would be Venezuela, of course, having the money taken out by the money printing and dropping hundreds of percents a year, or it goes 50% down every month or something. But from Bitcoin's point of view, for example, right now, the price, we see the price as low. We feel the price is low at 40, but basically it has been at 50 all year long, plus or minus 10. So between 40 and 60. So that's 50 plus or minus 20%, which is nothing from a Venezuela or Turkish perspective at the moment. You could easily have the minus 20% versus the minus 50% in a couple of months or even 1 month. So I think we sometimes forget the emerging market perspective on even in Europe, but the real emerging market perspective for people in Africa.